You wanted the best? Well, you've got the best. The hottest band in the world, Kiss. Yeah. Keep forgetting to tell you I did end up getting the Kiss tickets for Kid 1, Kid 2, Kid 3, and myself. Lady Antebellum decided that she didn't need to see Kiss again. She's already seen him a couple of times with me, but the kids have yet to see Kiss. So here is the order. We've got 4 tickets for Indianapolis, Indiana, Gainbridge Fieldhouse, November 25th. So that's the Saturday after Thanksgiving. It did cost me $1,150, but we did get 4 tickets and we're in row number 1. We're not the tallest of people. In fact, kid 1 is 5 foot tall. Kid 2 is 5'3". And me and my boy are about 5'8". He's probably about 5'8.5". So that's what we got going for us. Going to see Kiss. It is quite the event. It was a childhood favorite band of me and my older brother. And him and I have probably seen Kiss together, I'd say a dozen times. He has to work on that day. So him and his wife are going to see Kiss in Rosemont at the Allstate Arena in Chicago for his, I think it's, let's see, that would be that Monday. So it'd be 2 days later. He'll see Kiss with his wife on that Monday. But I wanted to share with you today what I have dubbed the money tree trade. And that is where we sell puts on a particular company like Chevron Oil that we want to own. We sell puts at a strike price, typically just one strike out of the money, to see if we're assigned. And then if we're assigned, we want to do that before the ex-dividend date. Okay, we'll talk about all of this. And then we're going to sell calls, collect premium as well, make money on the dividends, make money on the share appreciation. And that is the money tree. It's 4 different sources of income from one company, trading, selling puts, selling calls, collecting dividends, and then collecting a little bit on the top of the share price. So this is what has transpired over the last 2 weeks. So on October 31st, I did sell 5 put contracts of Chevron Oil for $144, and I collected $870 for doing so. Those contracts expired on 11/10. Well, they expired in the money. Chevron was trading at about 143, we'll say 143.50-ish at the end of business on Friday, November 10th. So I was assigned those 500 shares and I paid $144 a piece, a total of $72,000 into the trade. Okay, so then today, Monday, November 13th, I did sell 5 call contracts and I did that $2 above what I paid. So I paid the 144 and I sold the 146s expiring 2 weeks from now, just under 2 weeks from now on November 24th, collected $310 for doing so. Now, on Thursday, the November 16th, because I will be an owner, now they could be taken away before, they can be taken away tomorrow or Wednesday if somebody wants to early assign me and take my shares, but they'll have to pay me $146 a share to do so, which is $2 more per share than I've paid. Okay. So likely I'm going to lock in the ex-dividend date of November 16th, and it's $1.51 a share times 500. So that's $755 in dividends that I'll have on the board. I won't collect them on the 16th, but I will be on the board and in the books to collect a check from them when their payout date comes. Now, a couple of things, a couple of places you can find this information. First, an easy one would be Yahoo Finance to check on things such as ex-dividend dates, the upcoming ex-dividend dates. So there is the November 16th. It shows you they pay a 4.23% yield on their dividends for a total of $6.04. Now that's a total year, and they break those down into quarters. That's where we come up with $1.51. Now, to look at it further, a site such as Seeking Alpha will show you the details of that for you. So if we go to dividends, we will see couple of things here. We'll see one, there's that dividend yield. There's the annual payout. This shows you the payout ratio based on their free cash flow, what they've done over the last 5 years as far as dividend growth, and that they have grown their dividends consecutively for 35 years. So that's pretty good. So anybody that tells you we're moving away from oil anytime soon, well, oil's death has been greatly exaggerated. So here's the breakdown of the quarter. Okay, so there's the 151 that I will receive if I'm locked in on November 16th, which is Thursday. And then I'll be locked on, but I could sell it the next day and still be entitled to those dividends. And then the payout date when they send me my money is going to be December 11th, whether I own those shares on that date or not. Hopefully that makes sense. But that is the important of the ex-dividend date, is to be an owner that morning to lock in your entitlement to the quarterly dividend. So that is what we have going for us on Chevron and how it will play out, if it plays out according to my plan. It may very well not, because what it would have to do is the share price will need to be at 146 or above in order to be assigned those 500 shares that I sold those call contracts with. Okay, so if that does happen, then on November 24th, those shares will be called away. 500 shares at 146 per, for a total of $73,000, which is $1,000 more than what we paid, right? So there is our share appreciation. These items total up to $29.35, okay? And we'd be in the trade 25 days. So you know how I like my annualized math, right? So we take the $29.35 that we'll collect according to the plan. Again, this is currently just the thesis, and we've only gone through two sections, well, three, because we sold the puts. We were indeed assigned the shares because we may not have been, and we sold the calls. So 3 out of the 5 positions have happened that create the 4 legs and the 4 areas of income collection. So 29.35 divided by the 72,000 we have into it, divided by the 25 days that will be in the trade, if indeed these are called away on November 24th, multiplied by 365, which gives us the annualized return of 59.5%. Pretty sneaky, sis. And then the same holds true for Exxon Mobile. We have the same thesis involved with Exxon Mobile. But we're a little bit shorter in this trade, in that on November 6th, so that was last Monday, I believe, Monday or Tuesday, we sold 5 put contracts at 105. I was about a day early on that. I would have been better off waiting another day because Exxon Mobile did go down in value last week. 5 contracts there, collected $500. Now, on the 7th, I thought the price was probably a little low, so I went ahead and just bought 200 shares at 104.10 for a total of $20,820. Okay, we also surrounded it by selling 103 puts and collecting $150. On the 10th, indeed, ExxonMobil did go down below the 105 that we had on the put contract, so we were assigned 500 shares at $105 a share for $52,500, added to the $20,820 we spent directly by buying the 200 shares at 104.10 for a total invested of $73,320. Now, today, November 13th, we did sell 7. Okay, so now we do have 700 shares. So we sold 7 call contracts at 106. So $106 a share is what we're looking for. Expiration of November 24th. We did collect $504 in doing so. Tomorrow, so when we wake up in the morning, tomorrow, we will be entitled or lock in our entitlement of the dividend. Okay, so if we look at ex-dividend date on ExxonMobil, that is tomorrow, and they have a payout date of December 11th. Their current per quarter, 95 cents per quarter, they pay per share. Okay, 366 dividend yield. They have a 34.87% payout ratio, 2.74% 5-year dividend growth, which that's, fairly low. But again, they're still at 3.66, which is pretty good. And they have 24 years of consecutive dividend growth. Now, if you look at dividend history, it will show us dividend growth, okay, over time. So just like, for instance, we go back here to 2019, they had 87 cents a share. Wait, was that dividend growth or dividend payment? Yeah, it says 24 years of dividend growth. So if we look, we went from 87 cents to 88 cents to 91 cents to now the 95 cents, which they just raised. So they haven't even paid it out yet. So we'll be the beneficiary of the 95 cents per share. And it shows right here the ex-dividend date, the record date, which is then they, get the feather pen out, dip it in ink, and put you into their books so that they will write you that check on December 11th. All right. So that is the current plan on Exxon Mobile. And if it is indeed executed in that regard, on our 700 shares, we will collect $665 in dividend. And then if we were assigned, if we sell those shares according to the contract being called, 700 shares at $106 per share is $74,200. If we take the $74,200, subtract it by the $73,320, which is what we have invested, that gives us a difference of $880 profit as well. Adding these numbers up, we end up with $24.99, okay, divided by $73,320 invested, divided by the 19 days, because we just entered on November 6th and we're looking to exit on November 24th, divided by the 19 days, multiplied, annualized by 365 equals 65.4%. Now, that of course is Fantasyland math, currently still a thesis and hypothetical until we determine where that ExxonMobil price is going to be on this date, on this expiration date. It could very well be, under 106. It could be even further under that. Whatever the case may be, if we still own them, we'll continue to sell calls until they are indeed called away. And we'll always use the 105 and above as the number, because if it starts to drop to 104, 103, 102, we'll probably have to switch from 106 calls to 105s, and then just do that until we get our money back, sell those shares off, or our thesis change where we want to be long-term owners instead of money tree traders. Okay, because if we look, I did run a trade on ExxonMobil earlier this year, and I entered at 111. So I bought 500 shares at 111, and we began into this trade on May 1st, and then ExxonMobil began to go down, but we were collecting premium along the way, along with dividends. Okay, so we ended up with $42.65 that we collected on our $55,500 invested. We were in the trade for 122 days before they were called away, and they were called away at the price I paid. So I didn't get any share appreciation, but I still annualized at 22.9%. So not too shabby on that. That is what I wanted to share with you. I hope that it makes sense. And then another part of this, if you wanted to research your own money tree trade, what you want to look at is upcoming ex-dividend dates. So if we go over to barchart.com, I have a current screener up. So I'm on stock screener on barchart.com. There's a little link here for the screener. And then I've entered a few different screeners to be involved in my search. One was implied volatility. I was looking at greater than 25% on implied volatility. Why is that important? Because the higher the implied volatility, the better premium you're going to collect on both puts and calls. So I don't want anything crazy, but I don't want anything super low either, so that the premium isn't necessarily worth your risk reward scenario. Market cap, I don't want any small cap. So 2 billion isn't a huge company in today's day and age, but that's where I set the bar as the minimum market cap, $2 billion. Annual dividend, I've got 2% in here as a minimum on the annual dividend yield. You could go to anything you'd want. So if you wanted to include Apple or the lower annual dividend paying companies, you can do so. I've got 2% on the board just as a screener. And then what I used on this particular one was next ex-dividend date between 11/13 and 12/29. So if I was doing this today, I would change that because we're already through 11/13, and I would probably put it more like probably starting next Monday, because I want to be able to get into the position first by selling puts, right? So here is this particular screener and what it looks like. And let's refresh that just to see how many come up. And then if any names look interesting to us, they made me refresh it. So let's just real quick, let's start over. If you're still with me here, let's add market cap, put in our 2 billion, go back up here for dividend, go to next ex dividend date, add that, and then go to the calendar. Let's start with next Monday, because we need to be the owner of the day of the ex dividend date. So if we wanted to sell a put and be the owner by 11/20, that would need to expire this week, this Friday at 11/17. And then we would put the shares and then be locked in for that dividend. Then let's go ahead. We'll go through the end of the year, which would be the 29th as far as ex-dividend dates are concerned, because they are on days of the week, on work week days. Then we go back and put in dividend yield, add that. Let's put in our 2%. And then I'm not going to put in volatility on this one just to see how many come up. See results. We have 225 to look through to determine if any of these look interesting to us as far as a trade is concerned. Okay, so if we look through these names, like if I was just doing this on my own, I go through them pretty fast, because like right now, I'm not interested in any bank stocks. I already have Bank of America, I already have Jackson Financial. I want no more right now, because I think there's still some headwinds, some volatility to be incurred with regard to the banking industry. I have enough oil, so I don't really want to look at oil unless it looks very likely that my Exxon Mobile and my Chevron are going to be called away, because I still own Energy Transfer, Valero Energy, Devon Energy. I've got the oil and gas market surrounded. Just moving along, looking through here. I like Crown Castle as a company, but I don't like them with regard to yields. Oh, you know what? The other thing I always put in here is weekly. Companies that trade weekly. So that's another thing that I should mention, because you can search that as well. I like weekly because I feel like I could be in more control if I have to work on the trade, if I have to roll, if I have to buy to close. Weeklies are just more appealing to me. Doesn't mean I don't own just monthlies. I do. Cummings, I already have some Cummings that I'm going to try to protect through that ex-dividend date of November 22nd. But if I didn't have Cummings, I would look at Cummings, because it's almost 3%. Great company, incredible balance sheet. They don't have a great deal of volatility, which that's fine as well, because you could make this trade work on paper all day long. If you're selling for instance, let's just go to Cummings just to see, like, what does it look like on a put trade. Move my head again. So if we were to trade options on Cummings, it's a monthly, right? So right now you'd have a November 17th, which would, that's all you'd be able to do if you wanted to lock in that dividend with their November 22nd ex-dividend date, right? So because it's a monthly, if we sold a put 32 days out, it would already be past the time of that next dividend, so you wouldn't be entitled to it. So if you wanted all 4 legs of this income money tree, we would just sell it. Wow, it's $10 wide. That's kind of crazy. So like if you sold this put right here and you just did one contract, you'd collect $30, but it would have to go all the way down to 210, which is highly unlikely, only a 15% chance of that happening. So likely this isn't a good example, because unless you went crazy and you said, look, I think Cummings is good to go all day at 220, and you sold the 220 put, which is above the current price, and collected your $350 for doing so, and then you subtracted that back out and realized that it would be better off if you just bought it at 217.43. So Cummings right here, not a good example of the money tree trade, but it's a company that caught my eye because I have studied them a bit. Devon Energy for sure. If I didn't own, I think I am now up to 23 or 2,400 shares of Devon. So I do not need an increased position in Devon, but I'd be very interested in Devon if I did not have a position in Devon, because their next upcoming dividend is pretty healthy. It is pretty healthy. So let's look at what was the date on that? Go back to Devon Energy and you see that the ex-dividend date is 12/14. So you could sell a put. So if we look at trading options, I think Devon Energy is a steal at 45.48, but I could be completely wrong. And I hope you feel that way because you've paid an average of 49.80 for your 2,300 shares. So right now I'm underwater by nearly 10,000, but I'm still fine because I think oil's got some legs left in it this year. And Devon Energy is a well-run company that loves to return money to the shareholders. So if we traded the Devon Energy, sold puts, right, we can go all the way out to, what was the date again? See that short-term memory of mine. You know how it works. It is 12/14. Okay, so we need to be the owner that morning. So we wouldn't be able to sell the 15s because then we would miss out on that dividend. So if we sold the 8s and we got crazy, like say we wanted 500 shares, right? And we're just going that one strike out of the money. Right now it's 45.48. We can go to the 45 or the 44, depends on how frisky you feel. But if we went to that 45, right, and then we did 500 shares, which is 5 contracts, we'd be looking at around $575. Then we would take assignment of those shares. If indeed we did take assignment of those shares, we'd be locked in for that next upcoming dividend, which is, is it on here? It is on here. So you've got a 77-cent dividend, right? So we've got 77 times 500. We'd collect $385 in dividend. And then if you looked at selling, so say we were put those shares at $45, right? And then say we went out like 2 weeks from the time that we own them. Well, let's go 18 days out because we're looking at days here, right? This isn't the exact days that would be used because the dates would be different. But if we went out, even if you just was like being real crazy and went up only 50 cents from what you paid, or even if it was $1 to 46, you'd still collect $1 on those 500 shares. So that's $500 on selling the call premium, and then you get $1 per share appreciation, which is another $500. That's, in a perfect world on the money tree trade, that's why it's so exciting to me to consider these trades. Plus, I like to research them, run the math, do the formulas. All of that is very fun for me in looking at potential trades. Like EOG Resources would be another one. I've owned them in the past. 473 on the dividend. Whatever types of companies that you're interested in, go through these. Goldman Sachs, people like Goldman Sachs, it's paying a 315 dividend. They got an X of November 29th, so you can run the numbers, get out the options chains, etc., and determine what is interesting to you as far as trades are concerned. Like Johnson & Johnson was on my list. What did I have on my last list? I had NextEra Energy, Amgen, Agco. I had Qualcomm, ConAgra, Chevron, Corning, Johnson & Johnson, Phillips 66, Exxon Mobile, Archer Daniels, Midland. They're 11-14. So I had a big list of them, and I ended up with 2 of them. Both happen to be oil because you know how I feel about oil. I love oil. I just don't see any end of it anytime soon. So that's my theory on oil. So that's what we have. It got into a long dissertation. I hope that I make sense. I don't always explain things well because, of course, my mind understands it because I've been thinking about these trades and these thoughts for so long. It doesn't mean I can then explain them properly on these videos. But if you do like it, make sure you subscribe to the channel, click the thumbs up button, the like button, leave me a lovable comment, share it with one of your good friends and say, hey, have you ever considered the money tree trade? And you know what I'll do? I'll see you in the next video.